Welcome to my latest presentation where I'm going to be talking about something a bit different. Normally I talk about the economics of gold and the gold market, but I'm going to be talking about the three biggest risks to gold investors. And if you was to pause this video and to think for yourself, well, what are the three biggest risks? You'll probably be thinking about things that could happen to push the price of gold down. I only have one risk regarding that because I think that in most scenarios, gold prices will carry on going up. For various reasons that I've discussed on this channel already, but there is a risk to do with price, and the other two are not to do with price. And the third one is the best, and it's one that you've probably not thought of before, and it is the biggest risk. So to start off, this is the price risk. There is a risk that the gold price could go down. I think the only way that the gold price could go down and sustain that downward move is that central banks become sellers at the moment. So I'm recording this in April 2023. 2022 was a massive year for central banks buying gold, and Q4 of last year set a record for the amount of gold that was bought by central banks. And most of these are sort of Eastern Europe, Turkey, China. We don't really ever know what China's buying and what they've got. I'm convinced they underdeclare it. But we saw this in the 90s where central banks were selling, and a lot of people might think, well, there's so much geopolitic risk and inflation risk. Why would central banks sell? Well, the thing that I can't see past is that central banks have been buyers recently, in the recent couple of years. Whenever you buy an asset, eventually you sell it. I mean, if we buy gold, we either want to pass it on to our children to sell at one stage, or we sell it ourselves. I think that the same thing applies for central banks. Eventually they will sell for whatever reason, but I think that the biggest threat is coordinated selling. And the only real thing that I can sort of see with my limited scope is that this happens for the same reason that it did in the 90s. Central banks in the 90s were selling off because they were selling off their gold holdings because there was better assets elsewhere. There was assets that was performing much better than the gold price, and we could easily see this happen again because if let's look at Asia, right? So China is massive. There's more people in China than the US and the EU combined. When you look at the whole of Asia, most of the world's populations in Asia, and these are majority are very poor countries and are very poor regions. If you was to raise that living standard and give these people, let's say that for whatever reason the country GDP begins to outperform in real terms, and these people end up with a lot more money and it raises the living standard and the wealth, you could see a massive economic boom for commodities. They could be importing a lot of stuff from Western brands, Italian wine and French cheese and designer brands and designer cars, Bentleys and things like that. And these markets could boom. And if you are a gold investor or you're a central bank, in this sort of environment, you could see markets doing very well, bull markets all over the place. And if you've got your money in gold, that's like, it might feel like dead money because you're like, I've got, let's say you're an investor with £50,000 tied up in gold, and then you see all these markets booming and the gold price is just flat. At one stage, you're going to think, well, why don't I sell some of my gold and put it into this other investment theme? So I think that that is the biggest risk to the price of gold. The next risk that I see is changes to tax, and I think that so in the UK investors pay VAT, which is value added tax, and it's 20%. We pay that on silver, bullion, bars, and coins, and we also pay it on platinum as well. Gold is exempt from these taxes at the moment, and I always think that one of the things that could really disincentivize gold investment is putting a VAT charge on gold or putting some sort of charge on gold. Now, at the moment in the UK, it's law that gold is considered money, and Or I'm not too familiar with the law. It's something to do with the fact that it's considered legal tender or something like that. So a lot of the gold is exempt from VAT and capital gains tax as well. But I think that a change in the tax could really really have an impact on gold. And some people might say, no, silver's okay. Silver's okay in the UK, and silver's got VAT. But silver, what is that, like 20 quid an ounce? So VAT on 20 quid an ounce is not that much. You only need to look at platinum. I mean, I would love to have quite a nice holding of platinum, but the platinum market in the UK is terrible because it is VAT. Where platinum is a higher value item, the VAT is massive, and it's such a niche in the UK. People, I think, would invest, don't invest because of that reason. And I don't think that we will see any tax changes until they enforce the central bank digital currencies on us. Once that is forced on the population, the government will have a lot more visibility on what people are doing with their money. And the last thing they will want is people storing wealth outside of the system. I think it'd be a lot easier for them to identify who's dealing in big transactions, and if they wanted to start levying tax on gold, I think that they could do it. So that is a risk. I don't see it coming anytime soon, but it's definitely a risk.
Ornum is a precious metal bullion company based in central London. The company is known for sourcing very rare gold coins as well as their precious metal market reports, which are published on their website each week. Download the latest market report for free by visiting the Ornum website today.
The final risk, and the one that's most devastating, is linked with peer-to-peer trading. And this could be either buying and selling gold on eBay, or it could be an approved forum or an unofficial forum where you basically deal directly with other investors. This is the reason why I see this as such a risk is because, well, basically I've had a few people contact me that I've never spoke to before, and they have relatively large investment portfolios of gold coins and bars, but mostly coins. And they've been speaking to me about selling off part of their portfolio at a time. And it's over the last 6 months, I've had three different people say something quite similar to me, that one of their friends or one of their associates has been burgled, and they knew that they had gold, and they believed they was watching the house, and they basically got raided. And this is something that I believe is on the rise, and I think that part of it is to do with peer-to-peer trading, because if you are to, let's say you go and buy a couple of 1 ounce gold coins off of eBay, and you buy from different sellers, those sellers, you don't know who they are, but now they now know that you buy gold and they know your address. And it only takes you to deal with the wrong person, even if they've got good feedback on their profile, and they're reputable. Maybe you've dealt with them years ago. They know that you have gold. Whether they're going to rob you themselves or whether they know someone that might be capable and willing to do that, you have to be really careful about who you give your address to. And you're basically telling people, the more people that you deal with peer to peer, the more risk you're taking on, because there's more and more people that know you are a gold buyer, and they know where you live, and they might give your address out. Or if desperate things happen, I mean, we all invest in gold because we think that the price of gold is going to go up, probably at the expense of the economy. So the worse the economy gets, people start losing their job, they got mortgages, people do desperate things. Maybe it enters someone's head, I know where a lot of gold is. I know I know through watching some of these peer-to-peer platforms, probably seven, eight people that are big gold buyers, and I've sold to them before. I know where they live. So it's very, this is something that is, I've never seen this discussed on a YouTube channel before. You get all these YouTube channels talking about gold and how they always repeat the same crap about how bad the government are, etc. But no one ever warns about this. If you're dealing with fellow investors, you do not know who you're dealing with, but they now know where you live, and they also know you're a gold buyer. And there's very little you can do about it, because you can put your you can put cameras up and have added security, but a lot of uh, a lot of break-ins now are not as you would expect, like thieves in the night. They're people that will knock on your door, and as you answer, they will just assault you, and you'll have a home invasion. Even if you think, oh, it's okay because I've got a safe. Yeah, but what are you going to do if they put a knife to your wife's or your children's throats and say, tell me where the effing safe is? You're going to open that safe as like a rat up a drain pipe. So this is just something that I hope that me mentioning this on the presentation will make people think, and hopefully save someone from getting raided. You can get PO boxes with the Royal Mail, so it can disguise your address. The problem with that is that I think it's about 250 quid a year to have a PO box. It's quite expensive, but it's definitely worth it. I definitely would not be giving out my address to people that I don't know and allowing them to know that I am a gold investor.